all know, the tax season is right around the corner, so it's a good idea to start getting ready for tax season as soon as possible. Today, I have 6 key changes for the upcoming tax season. What's up, my people? It's Kiwanis, your credit advisor. Make sure that you like this video. If you have questions, make sure that you leave those questions in the comments. If you need a tax preparation checklist, check out the description to download you a free copy. So let's jump right into today's video. So number 1. In 2021, under the American Rescue Plan, the child tax credit was expanded. The child tax credit increased from $2,000 up to $3,600 for each dependent child under 6 and up to $3,000 for each dependent child ages 6 to 17. It was also the first time that you could claim the child tax credit for a dependent child that was 17. The credit was also fully refundable, which means that you were eligible for the credit even if you didn't owe taxes. Now, for the first time, there were advance payments. These were the stimulus checks. They were issued for half of the child tax credit for each dependent child. You were eligible for the full credit if your income was under $150,000 for couples who were married filing jointly, and then $75,000 if you were single, or $112,500 as the head of household. For the tax season of 2022, the child tax credit reverts back to the benefits available prior to the American Rescue Plan. So it goes back to the $2,000 for each dependent child, must be under age 17. It's refundable up to $1,400, but it's no longer fully refundable. Advance payments, of course, we already know they did not have stimulus checks in 2021. The credit is available if you earn up to $200,000 as a single taxpayer or head of household, or up to $400,000 if you are a married couple filing jointly. Now, 2. For the tax year 2022, the Child Independent Care Credit goes back to $3,000 per child with a 35% refundable. This is all based on income. The credit will be reduced as incomes over $15,000. 3, we have the Earned Income Tax Credit. Now, in 2021, the federal Earned Income Tax Credit was expanded for workers without kids. Eligibility was also extended for a wider range of other filers, allowing taxpayers without kids to qualify if they were over the age of 65 or between the ages of 19 and 25. Now, for the year 2022, the age requirement reverts back. Taxpayers with no kids have to be 25 or under 65 to claim the credit. Previous year income cannot be used to help you qualify for the Earned Income Tax Credit. Also, the amount of the Earned Income Tax Credit is adjusted for inflation every year and will be up to $6,935 with 3 or more kids. Now, 4 is the No Recovery Rebate Credit. This was if you were eligible for the 3rd stimulus payment and you didn't receive your payment, you were able to claim that recovery rebate credit on your 2021 taxes. Now, number 5 is there's no more self-employed sick and family leave credit. So you can no longer take that credit on your taxes if you are self-employed. Now, 6, the one good thing that is come out of this is that teachers can now deduct up to $300 worth of qualified expenses from their income for the 2022 year. I want to thank you so much for watching this video. I hope that you have found value in the information. Please consider subscribing to the channel so that you don't miss any of the videos. Until next week, stay safe.